are up and about in trade. So you have a Jupiter Wagons, Texmaco, IRFC, IRCTC, all of these counters, strong moves in today's session. Midcap ITB already mentioned. Swan Energy is seeing some smart moves. Let's pull up a 5-day chart of a Swan Energy because the moves have been absolutely strong with regards to this counter. Today around 1.5%, but if we can just have not even an intraday, for a 5-day chart of a Swan Energy to see the move. So that's another one that we have been watching out for. 1 month, 17% is the kind of gains that we've seen. Quest Corp is seeing some smart moves as well as a Zomato in trade. So these are a few of the movers and shakers in trade today, but one stock, Rolex Rings, is on our radar today. Again, a 1-month chart of a Rolex will tell you, and a YTD chart will tell you what's happening with the counter. Today, somber moves on this one. 1 month, around 5.5% is the up move that we've seen. Now, the auto parts manufacturer is trading with mild cuts today, but has surged over 15% in the last 6 months and around 33% on a YTD basis. A net debt negative company, eyeing strong growth in the EV segment, and also expecting the share to absolutely double by 2025 in terms of overall revenues. To discuss more, joining us on the show is Hiral Dadia, CFO of Rolex Rings. Hiral, good morning and welcome to the show.
Very good morning, ma'am.
Hiral, my first question coming to you is overall, from the way the markets have been taking EV growth as a segment, what is the strategy?
See, madam, the facility, the capabilities what we have set up is, able to cater not only the IC vehicles or not only the particular kind of or set of vehicles or in that fraternity, even the new age vehicles like not only EV, hybrid vehicles. We have developed many components in that segment. And let me tell you that those components are very well accepted by the OEMs, and they have already started using or rather feeding those components into their vehicles. So we do have facility in terms of EV as well as hybrid vehicle component manufacturing.
So overall, currently, what is the market share or what's the overall contribution of EVs in terms of revenues? And as you've said that you're looking to nearly double it by 2025, what are the kind of B2B companies that you think you would be supplying to and what regions?
Let me tell you, in last fiscal, EV contribution to overall revenue contribution, that was somewhere about 5.
And another thing is that, Europe, US, both have been markets that you have been looking at. Europe has been slightly weak. Is the domestic market and the US region able to make up for the weakness in Europe? And when are you expecting that turnaround to happen with regards to the European markets?
Yes, definitely it has already made up. In European market, you better know for last almost 15 months or something, it has reduced significantly as far as our existing business is concerned. But in US, we are getting good response, and we are very much positive, as you know, after the recent announcement by Fed, which they are expecting some kind of reduction in Fed rate in next year or down the line couple of years. So which will definitely give some more or rather moderate growth to the US and nearby countries. Particularly, we are very much concentrated for US, Canada, and Mexico. So we expect some kind of turnaround, and definitely it will restrict the recessionary waves to entering into that market. As far as domestic market is concerned, definitely we are very much bullish on domestic market because of various factors, infrastructural growth, the initiatives by the central governments to boost up production as well as for incremental exports. And moreover, my customers, the major customers in domestic market, they are into expansion more. So definitely we'll be getting good share in their incremental production.
Okay, so Hiral, are you saying that the second half of FY 24 is something that will be better than the first half? That's number one. And two, if that's going to be the conversation that we're looking at, what is it that will drive the growth in the second half?
we do not expect significant growth in particularly second half of FY24, because as I told you that we are into development of many components. We have already developed, and the gradual supply will be ramped up from the last quarter of this fiscal, or maybe in the first quarter of the next year. So, but definitely this year may not be having, that high teen growth or something, maybe lower teen growth, what we are expecting compared to fiscal 23. But definitely bullish, or rather more positive for FY25 and FY26 because of the kind of program orders what we have received and the new components what we have started manufacturing, as well as my existing customers have added certain components, particularly in domestic market, which in turn they are into non-automotive or in industrial segments, railways, and so on.
Okay. So Hiren, earlier you had a guidance of around 12 to 14% in terms of FY24, and 25 the expectation was around 16 to 18%, and margins were looking at around 22.5 to 23%. Is that something that you still maintain, or do you think it could be slightly lower?
There would be a couple of percentage here and there as far as this current fiscal is concerned, but very much positive, or rather confirming the numbers for the next year, as well as the margin what we have already been stated. It would be on those lines only.
Much, but will it be lower in terms of FY24?
A bit off.
Okay. And in terms of capacity utilization, where does it stand currently? And apart from this, how much do you think you will be able to scale up to?
As of now, we are at the stage of somewhere about 60 to 63% of utilization of my existing capacity. And we are, more focused or concentrated to enhancing our capabilities, which will be able to offer more value-added products to my existing customers, even to the new customers, which will definitely give me a better margin and a strong customer association. So that would be the strategy for the timing as of now, and there would be a gradual expansion in terms of enhancement of the capabilities, and particularly in the segment where we are more than 90% utilized, there we are going to expand.
Okay. And overall, in terms of the order book, what is the monthly run rate looking like?
It ranges between 110 to 120 crores per month.
Okay. And are you expecting an expansion on that front?
Yeah, definitely. From next fiscal, it would be. As I told you that the new components, the new customer would be started in the next fiscal. So that will ramp up, definitely.
Okay. And overall, if you see in terms of the hybrid PV project, that is something which you've started supplies with. An Italian customer has initiated sourcing of hybrid and regular PV projects as well. And Brazil and Mexico clients have also confirmed this. So taking this segment into consideration with regards to hybrid PV, what is the outlook?
Yeah, outlook, as I told you, for the fiscal 25 is much better, and for fiscal 26, again, much on better on the FY25. And we expect good momentum, and even we expect some revival or regaining in the European market, where existing market has been gone down, but later part of the next fiscal, we expect some momentum over there also. So we are very much confident as far as FY26 numbers, which would be having my growth curve would be very much in fast pace.
Okay. With regards to where the solar unit is concerned, that should have been commissioned this month as well. What's the kind of cost efficiencies that you will see out of it?
See, we are in process, or rather we have already installed 4 megawatt of solar, and another 11.5 megawatt would be operationalized maybe by end of this month or by Jan 24. And both put together in next fiscal, it may give incremental or a cost reduction to the extent of 13 to 15 crore rupees.
Okay. Hiren, in terms of the segmental revenue breakup, bearing rings is what is almost 59%. How are you expecting that mix to change? And secondly, the mix between exports and domestic, how is that expected to change?
Definitely exports would be more. As of now, it is somewhere about 58% of our revenue is from overseas and remaining from domestic. This ratio will go up down the line 2 years as we got a good amount of big programs. As far as segment is concerned, bearing ring, again, we are at somewhere about 57, 58 percentage and the remaining with the auto components. So we would be broadly, it would be somewhere about 55, 45 because we are adding new customers even in bearing ring business or in auto components both.
Right. All right, Hiren, thank you so much for speaking to us at NDTV Profit and giving us those views. So clearly, FY25, yes, the company does maintain its guidance, but in terms of FY24, the revenue growth could be slightly lower. That's what we are watching out for. But let's quickly slip into a short break. Once we are back, Akash Agarwal, Hometime Director at V2 Retail, will join us to give us their business outlook. Please stay tuned. Welcome back. You're watching the small and mid cap show. Now, the stock that is on our radar today is V2 Retail. As we know that the company offers large variety of smart, trendy, fashionable apparels across categories. Now, the same store sales growth has been over 16% as compared to a degrowth of 6% for one of the peers, that is V-Mart. Let's understand the growth prospects. To discuss more, joining us on the show is Akash Agarwal, whole-time director of the company. Akash, good morning and welcome to the show.
Good morning.
Akash, clearly one of the key things that we are looking out for here is how the festive season has been, if you have to look at October, November, because the festive season was divided into 2 months. And now that you have December, which has trickled in, overall, what has the trend been so far?
So first, starting with Durga Puja, we saw a very good rise in footfalls, and we've seen that trend continue throughout Diwali and Chhath Puja, and even during winters. So now the temperatures have also dropped, and the good thing is we're seeing an increase in the same store sales growth every month. So we have a very positive outlook for this quarter and the quarters going forward.
Okay. So in terms of the store sales growth as well, what is that looking like now currently? Because the trend has been absolutely strong as compared to peers as well. Higher double digits is something that you will be able to maintain?
Yeah, we are already beating the numbers that we posted in quarter 2. So like I said, every month we're seeing better same SSG numbers. So I think the trend is going to continue and we're going to post much better numbers than Q2.
Okay. Akash, another aspect is if you see in terms of the sales per square feet, that has come down slightly. What is the reason for that? Is that the number of store additions which has led to the decrease, or I mean, what's the key reason for the same?
What is the reference point that you're talking about? Sales per square feet from last year have actually increased.
The sales per square feet.
No, but if you compare it to the quarters last year, it has actually increased, the sales per square feet for us.
Okay, so it's increased overall, but no. So if you see the trend from 2019 to 2023, from 792 it's come down to 651. Yes, from 2022 it's gone up. But overall from that period to now, if I'm seeing from 2019 to now.
Yeah, so I would say the major impact was because of COVID. A lot of our stores were open for large parts of the year. But I think this year we will post a better sales per square feet than the pre-COVID year, which was, I think, 720. So this year we would do around 800 rupees per square feet of sales.
Okay. And in terms of the store openings, how many are you looking to open in terms of the remainder of financial year 24? And what's the trajectory looking like in terms of 25?
So I think this year we would open around 8 to 10 stores by the end of March. And the next financial year, we've taken a target to open 25 new stores.
Okay. In terms of private labels, how is V2 Retail placed? And is there any targeted contribution that you're looking at from private labels which can then increase margins?
So currently our private label contribution is around 60%. And the target is to take it to 100% in the next 1 year. But the private label doesn't really give us extra margins, because whatever extra benefits we get, we are passing that on to our customers. So to get a higher per square feet sales.
Okay. And overall, in terms of the fourth quarter as well, what is that average same-store sales growth that you would be looking out for now that we're going to be towards the lag end of the festive season?
We would be looking to at least maintain the SSG numbers that we're getting now. So I would say we would be looking to get a same-store sales growth of at least 20%, even for quarter 4.
Okay. And in terms of FY24, top line, margin and bottom line, what's the growth looking like?
So I think we are targeting a turnover of about 1,100 crores for this year. So that's a healthy growth from last year, almost, I think, 35%. And we're looking at similar numbers for the bottom lines as well.
Okay. And second quarter, we did post a loss as a company. Do you think you will be back in the black?
Yes, definitely.
And what is it that will lead the company to be back in the black?
So we have taken a lot of steps. I think the thing that's leading the charge is the product development. So our product development constitutes to about 50% of our sales now. So those 50% designs are exclusively designs that you get only at V2 stores. So I think that has given us the biggest push. And also we were able to reduce our old aged inventory. So I think the freshness at our stores have increased a lot. And if I list all the factors, there are 18 to 20 factors that have all contributed to this growth. And we're looking to continue this momentum and post much better numbers.
Right. And Akash, overall, 2020 as a year, you did see double-digit margins at around 10.8. After that, last couple of years, that's 21, 22, 23, you've seen somewhere in that range of 9.1 to 9.4. Do you think it is going to be easy to get back to that double-digit margin trajectory?
Yeah, once we are, like you can see in the last 2 quarters, we've already posted much better numbers from last year, and that trend is going to continue. So if we are able to grow consistently and post similar numbers, I think we can achieve it very, very soon.
Okay. And, I did speak about being back in the black. So FY24, if the company is able to come back in the black in terms of profitability, it'll be a profit after 3 consecutive years of losses, right?
Yes, it has been a long time coming. We have been consolidating for the last 3 years, but now it's time to bear the fruits of all the efforts that we've been putting in the last 3 years. And I think this is an upward spiral that should continue moving forward to FY25.
And overall, in terms of geographical expansion as well, what is that going to look like?
So we are focusing on expanding in similar clusters where we're already present. So that gives us a lot of leverage in terms of marketing, in terms of logistics. And also, we already have a brand presence there. So we are focusing on areas like Bihar, Odisha, Jharkhand, and UP. So those markets have historically been good for us, and we are increasing our presence in the same geographies.
Right. And my last question coming to you is, what's the key milestone that the company wants to achieve if you have to look at the next 3 years?
So I think the key milestone for us is at least growing at 30 to 35% revenue every year and getting an EBITDA margin of 11 to 12%.
Right. So that's something that the street will be watching out for as well. Thank you so much for joining us on the show, Akash, and a pleasure to speak to you as always. So that's the management of V2 Retail. Let's just have a comparative chart of V2 Retail along with a V-Mart, because that's going to be interesting as well. V2 Retail, there you go, more than doubled in terms of the last 1 year, whereas if you see in terms of V-Mart, we've seen a degrowth of around 37 to 38% as well in terms of the stock price performance. With this, we do have a comparison in terms of the same-store sales growth, I beg your pardon, as well of both the companies. If we can just have that on the screens, because that will clearly tell you the kind of growth that we are seeing. There you go. The trend that we've seen in terms of V2 Retail, double-digit growth in terms of the same-store sales growth over the last 3 quarters, whereas if you see in terms of where V-Mart is concerned, 2 out of the 3 quarters have seen a degrowth of around 6% in the second quarter and a degrowth of around 3% in the fourth quarter, whereas it was only the first quarter where just a single digit, a 1% up move is what we've seen. So clearly the trend is telling you the kind of up move that V2 Retail can be seen. And overall, if you see in terms of the profit number as well, after 3 consecutive years of a negative number, a loss, the company has said that FY24 they will be posting a profit as well. They are now looking to start consolidating its business, and from here on, a double-digit margin growth is the key milestone that they would want to achieve. So good prospects that are coming the investors' way with regards to where V2 Retail is concerned. But completely out of time with that. That's all that we have on this show. Please stay tuned. Ask Profit will take the action forward from here on. This is NDTV Profit.